Hello, happy first Thursday of 2023. We have a lot with Jobs Week and CPI numbers coming out next week. So just right into the thick of things here in 2023. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends we're watching, and hopefully weed out a bit of the noise along the way. Again, here we are, first Thursday of 2023. So I hope everybody had a great time celebrating the holidays and a happy new year. And hopefully everybody is back to it, gearing up for a very productive 2023 here. This week was shorter again, right? So again, this Monday, just like the previous week, we only have 4 days of trading with the holiday. New Year's holiday was observed on Monday. So 4 weeks of trading, but it has not disappointed. So we'll start, basically this week's all about jobs. Let's just call it what it is. So we'll start off on Tuesday, first day back in trading, and we had job openings much higher than expected. So this was kind of interesting to see because this has been the push and pull of the jobs data and what's going on with the Fed and, you know, all the challenges with interest rates and is the economy slowing, is it not, all this stuff that seems to be the constant push and pull of the markets in this range right now. And job openings were much higher than expected. Again, kind of leading us to believe that the jobs market is still, let's just say it has some room to match up supply and demand. Let's call it that. All right, fast forward to today on Thursday morning, we had ADP employment numbers come out and jobless claims. Now, both of these numbers came out in what typically would be a good news data point, but because the market is so worried about the Fed and what they're going to do, again, although they've kind of coordinated this and voiced it time and time again, the market's pulling back quite a bit based on this noise, or this data. So here we are Thursday, an ADP employment report came out showing that 235,000 jobs were added and initial jobless claims fell to 204,000. That was quite the surprise. So both of these numbers would typically be a good news situation, but because the the market is so worried about the Fed, we're seeing a pullback on that data right out of the gate on Thursday morning there. So this will be important to watch. Now, what I want to share is, again, the initial jobless claims number is pretty, you can follow that one pretty closely. The ADP employment number has never been good, to say the least, let alone, so if you might remember a few months back, they revamped it. So it's always had its issues, let's put it that way. And now that they brought it back out, it remains to be seen how accurate this is. Last month, the ADP employment report showed a much different tune than the non-farm payrolls that we'll get on Friday. So we'll see if that's the case here for this month's data. But regardless, both of these numbers added up to what would typically be good signs, but concerns around what the Fed may do in the February meeting. And so we saw initially a pretty big pullback in the markets there on Thursday morning. Coming up next week, before I get to our question of the week, is a lot. So tomorrow on Friday, we have non-farm payrolls. So that's the one to really watch. And especially with what we saw this week on job openings, on ADP employment, and on jobless claims, we'll be keeping a very close eye on this non-farm payrolls number tomorrow. And it's likely that we see a bounce or a pullback based on that number even further, just based on Fed speculation of what may be coming. But also, maybe more importantly, or just as importantly, tied to so as we look at the Fed, there's two things. There's jobs is basically what they're looking at, and there is inflation, right? And actually, I should reverse that. It's inflation first, jobs second. But where I'm going with this is that we have non-farm payrolls tomorrow, and then fast forward to next Thursday, we have CPI data coming out that morning as well. So this, we are hitting it hard in 2023. We've got all the data points coming out very quickly. Again, although the market may react in the short term to some of these data points, what I want to remind you is that the Fed does not meet again until February 1st. So just like the last 9 months of 2021 or two, excuse me, there's a lot of speculation on what the Fed's going to do around these data points, but they have communicated clearly what their plan is, and I imagine that probably will be the plan moving into 2023 as well. So important to watch, but remember, let's not get too wrapped up in that short-term volatility, right? All right. As for our question of the week, I want to thank Julie for reaching out with this one. It's a really good one and very timely. The question of the week from Julie is basically, what should I be looking at in the new year to make sure I'm heading down the right path as far as finances go? So I will share 7 kind of top considerations to think about in the new year. And, of course, if you have questions or you're curious about a little more detail, definitely let me know in the comments below. I'm happy to answer some questions. So the first is to lay out your goals and priorities. Without this, there's no path, there's no clarity on what you should or shouldn't do. Similar to when we have client conversations with clients, if we don't know what we're trying to accomplish, there could be 2 different recommendations that could take you 2 different paths. So we need to get clear on our goals and priorities very first and foremost. That is a huge thing that we help our clients with. And the start of the year is a perfect time to do it. So I would suggest writing things down, really getting clear on that. And that way you can make sure all the changes that you're making in 2023 are towards that path. Second is reviewing beneficiaries. So especially with the Secure Act impacts from the first Secure Act that passed in 2019, want to make sure that you review beneficiaries, check both primary and contingent beneficiaries right now. Third is to get a head start on taxes, right? Start thinking about looking at your income for last year and get an idea of what you withheld and where things stand, any conversions you might have done. And that way you can get prepared for either a tax bill or a refund, depending on what's to come. Fourth is start planning out your charitable donations for 2023. That'll help you also with tax planning, obviously, for the year as well. Number 5 is new saving strategies. So especially this year, we had big increases in contribution limits in 2023 because of inflation. So definitely reassess your saving strategies. If it's 401ks, IRAs, you name it, just reassess that, look at the new limits and consider whether or not you can handle increasing those to that new contribution limit. 6th is investment allocation. This is important. Now, hopefully you made changes last year because a lot of the same story, I think, is going to continue into 2023. So hopefully you're prepared for that. But it is a different world out there. So if you haven't made changes, definitely take a look at your investment allocations. Start thinking about what you want to do in 2023 and make those adjustments. And then last, the 7th is estate planning. So start to kind of tie to your beneficiaries, make sure you've got your estate planning documents in place, make sure everything is buttoned up, squared away so that, knock on wood, if something does happen, your family or charities or loved ones are taken care of. All right. So hopefully that's a good list, top 7 things to kind of quickly review in 2023 and get off on the right start. Thank you guys all for joining us again. Next week is full with non-farm payrolls tomorrow and CPI data next Thursday. So we will see you Thursday at 3 for our second 2023 session and have a lot to cover. Have a great weekend coming up. We'll see you next Thursday.